You guys already know today's Tax Tuesday. I'm doing that LeBron.
You know what it is! It's Taco Tuesday!
And this is not a brand new watch that I'm wearing. This is a carpal tunnel kind of thing because I've been working so hard for you guys making these videos that my wrist is kind of giving up on me. For today's video, I'm going to talk about dependence and climate dependence. Just because the government is giving you some sweet deals doesn't mean that you should be having kids or anything like that, or stealing kids. You know what I don't like, or I think people find funny, but as a tax accountant, it gets really old when people put on Facebook, oh, can somebody let me borrow their kids for tax season? Like, that joke is so old. Welcome to SimpleChew. I'm your host, Hank. I'm your favorite accounting. I've been doing this for 10 years. I also run a resale business on the side for the past 5 years. You've been following me. Thank you very much. For every like you hit, it'll be more money to your account. So hit that like button. Also, if you're new, welcome. I suggest you to subscribe. Also hit the bell because I've been delivering videos every
Mondays, Tuesdays, Wednesdays, and Fridays now.
I got 2 playlists for you guys. Also have an ebook that's totally free for you guys if you want to learn Investment 101 and you guys have no ideas. Boom, it's for you guys. I'm also working on the audiobook. Just give me some time. You can catch the ebook at www.simplechew.com. Before you can start putting dependence on your tax return, the IRS is going to make you jump a bunch of hoops. And you're going to start feeling like you're an American Ninja warrior. And you need to start jumping all these obstacles. And the first test that they're going to put you through is the test for claimant dependent. And that one is that it's just going to go through a bunch 3 tests that's going to show you if the dependent that you're trying to put in your tax return is actually valid and you can actually put them. And the first thing is the dependent taxpayer test. And that just means that the dependent you're trying to use on your tax return cannot be claimed in somebody else's returns. That just means that if you were married and then you got divorced and there were kids involved, that your husband or wife cannot claim the kids in their returns, and then you cannot claim them. It's like you can't both of you claim the kids at the same time. Only one parent can take that responsibility and take that advantage and that credit. So it's something that is kind of a pain in the butt if you're in that situation. The other one is the joint return test, and that just means that the person that you're trying to put the dependent you're trying to put in your tax return cannot be filing as a married couple, like a married. Let's say you have a 16-year-old or an 18-year-old, and he goes to Vegas and he marries some stripper or something, and then for some reason they want to do a joint return because it benefits their standard deduction or something. It sounds crazy, but it has happened, and if that happens, you cannot claim that dependent in your tax return. They have to do their own return on their own, and it's just crazy to say. And the last test that the government is gonna make you jump is the citizenship test or the residency test. So the dependent has to be either a U.S. citizen or a resident, permanent resident in the United States, or he has to be from Canada or Mexico and actually live there for a year. After you pass the first test, congratulations. Now we got another test. There's another obstacle that you have to go through, and this is a test to see if the dependent can be qualified as a child. And to qualify as a child, is going to be a bunch of other tests that you have to meet before that dependent could be quoted qualifying child. And for that, the first test is the relationship test, meaning that the child must be a son, a daughter, a stepchild, a foster child, a brother, sister, half brother, half sister, stepbrother, stepsister, or a descendant of anyone. So the stepsister has a brother, and there's also your stepbrother. So any descendant of that origin. So that means that you cannot be claiming your uncle, your nieces in this as a qualifying child. It's really specific. A lot of people get confused because, sometimes they're taking care of a niece that is like 3 years old. But it's clearly stated that the IRS doesn't like for you to be in the category of qualifying child if it's a niece. It's just something that, it's just another hoop that you're probably going to fall in the water. The next hoop that you have to jump is, hopefully you make it before you fall in the water, is The test, the age test, meaning that you, as the taxpayer, cannot be younger than the dependent, meaning that, let's say, if you like the adoption and then you adopted somebody who is 21 and you're 18 or 19, and he's living or she's living with you, but you adopted them. I don't know how that work, but you cannot be younger than the person you're trying to put as your dependent. Weird, but it is what it is. The other one is that including in the age, which confuses a lot of people, that the person that you are trying to qualify as a qualifying child, the dependent has to be 19 years old or younger. Also, if it's they are 24, it could be all the way to 24. But to qualify as a dependent, if you're 24, you have to be a full-time student, so you have to be in college. You can be in high school, but you're kind of old to be in high school. But you have to be a full-time student. Also, if your qualifying child is could be any age, so it could be older than you, it can be obviously younger, whatever, or your same age, but they are disabled. It's so now the rule of you being the taxpayer, and if the person is younger, so if you're younger than the person you're trying to put as your dependent is disabled, it doesn't. You can still put it because the disabled makes it valid. All right, moving along. So the residency test, that's pretty easy and standard. So to qualify for the qualifying child, they have to be living with you for 6 months or more. Making some progress now. The other one is the support test. That just means that you're paying everything. That your dependent is not paying more than half of the rent. Let's say, I just one example, or they're not paying 50% of their support of living, so food and shelter and stuff like that. So you're providing most of the expenses for that dependent. At the end of the day, that's why you are putting them as a dependent, because you're the one putting all the money up front and you want help from the government. It's not even help, but it's like, hey, I need a break. You can't be like taxing me for this. So you want like a credit. So now we're gonna be moving with the qualifying relative. Now it gets really interesting. Now people start asking different type of questions, and you're gonna be jumping another type of hoop. So now you're gonna be in a different area of American Ninja. So now you pass the first type of hoops. If you are going through a qualifying child, now we're gonna go with the qualifying relative, and now we have to go through a new set of tests, a new set of hoops. And the first test question, they really make it really easy. It's like when you're taking a test, and a standardized test, and the first question is like, what's 2 plus 2? You know the answer really quick. So it's the same thing with this. First one is, if you can qualify as a qualifying child, you cannot qualify as the qualifying relative. And the second one is the support test, and this one's like the qualifying child, where you're supporting that person, or you're providing more than half of the support of income for that person to live. So that you're paying the rent, you're paying the utilities and stuff like that. You're paying everything, or at least even if they're paying like 30%, you're still paying more than 50%. If they pay 55% of the rent and utilities and all that, helping you, cannot be qualifying this person. This person cannot be a qualifying relative to you. But if they're only paying 45 or 40, there's like a gray area there. But you have to be paying more than 50% of the support, and that could be also if you're in the relative qualifying area, they don't have to be living with you exactly. Meaning, if it's like a parent that is in a nursing home kind of thing, they don't have to be living with you, but you still supporting them financially. Okay, the next hoop is a little harder now. So the qualifying relative has like a gross income kind of threshold where they cannot surpass, or you cannot claim them. And for 2019, I'm gonna be updating this video for 2020. Is less than 4,200 gross income that they can earn. And now we're gonna go talk to the relationship test, and this one is the hardest one. Like standard tests, the hardest ones are usually the last ones. I never understood that, but I think that's true. Anyways, so the relationship test is a little harder. So your dependent has to live with you for the whole year. So if it's like a nephew or a niece, and they've been living with you for the whole year, they have to live with you the whole year. This differ with the parents or in-laws that they're getting older and they're living in different, they're not living in the same household, but you're still providing their support. So who are their dependents for relatives? They can be stepchilds, they can be your brother, your sister, your half brother, your half sisters, your father, your grandparents, yeah, any direct ancestors to you, not counting foster parents, which I think is kind of messed up because they took care of you. Stepfathers, stepmothers. See, that's the confusing part. Any sons of the taxpayers, brothers or sisters, nephews and nieces, kind of thing. Uncles and aunts. That's where you're gonna be putting them. Any sons-in-laws, mothers-in-laws. Even this is also interesting. So if you guys divorce, you divorce your wife, you divorce your husband, but you still support their parents. So you're still supporting your ex-husband's parents. So you're still supporting your in-laws, even though you guys are separated or divorced or whatever. You still supporting them. You can still put them as your dependent, as a relative, qualifying a relative, which is really interesting. It's something that took me by surprise. And somebody came to the office and asked me this, and I was like, I didn't have an answer, but live and learn. Thank you guys for watching. That's it for dependents. Welcome to Tax Tuesday. I'll be talking about next video is gonna be, I think, gross income and earned income, the difference. But obviously, and always remember, guys, keep it simple.